Hello and welcome to the Ask Assaad Show. I'm Michael Gaines, host of the podcast NOV Today, and glad you are joining us for our conversation today as we look to bring insight out by talking with our internal experts here at NOV to bring you industry perspective and have conversations around things that matter to you. So look forward to having you join our conversation today. And before we get to Assaad, we wanted to bring in Shelby Dumaine to talk about how you can not only be a part of the show, but also share some of your comments, thoughts, and opinions. Hey, Shelby.
Hey, Michael. Yes, there's a couple different ways you can get involved with today's show. The first and maybe the most easy way is simply by commenting down below. So if you have a question and you want to ask Assaad yourself, you can go ahead and put that comment below, whether you're watching on Facebook, LinkedIn, or YouTube. We're going to get to as many comments as we can on the show today, and we look forward to seeing what everybody has, what they want to, what thoughts they have there in the comments. A few other ways you can get a hold of us, say after the show, if you want to. If you have any more questions or you have another thought or idea that you'd like to share with us, we love hearing from our audience. So you can contact us. The first way is at askassad@nov.com. So you can email us there and let us know what questions or comments you have. And then the other way is our comment phone line where you can call in and leave a voicemail. I like this option because you can stay anonymous if you choose to, or you can let us know your name and title, and we can feature you on a future episode. But that number is country code +1 346 223 4799. So we'd love to hear from you if you want to give us a call. But if not, if you have questions for Assaad or Michael today, go ahead and comment them down below, and I'm going to look at and get to as many as we can today.
All right. That sounds good, Shelby. I would love to answer questions. This is the Ask Assaad show, but if you do have a question for me, I'm always happy to help. So as I just said, let's go ahead and bring in our internal business strategy guru. We have Assaad Mohanna. He is the director of business strategy here at NOV. So. Hey, Assaad, glad to see you. If I get questions, this is an Ask Assaad show, so they go straight to you, not me, right?
Michael, all the time.
Yeah, how you doing? No, good to see you. So, so let's kind of jump in. As always, I know that we're at July, so kind of the end of the month. So that means that we're kind of finishing up earnings season. But I know that's our main topic. But kind of this week, kind of what are things that were top of mind for you?
Yeah, certainly. So first, we're going to talk about a special visitor to the Permian Basin today.
Okay.
We have the President of the United States, Donald Trump, visiting one of the drilling rigs out in the Permian Basin in a show of support to the industry in the U.S.
Oh, okay.
So it's pretty cool.
I missed that. I missed that headline. So was that a planned visit, do you know, or was that kind of a surprise kind of drop in?
It was out in the news this morning, and he's actually getting on a rig, which I think is pretty exciting.
Wow, interesting. Wow, okay, good, yeah. That's interesting. What are there other items that have kind of caught your eye? I know that. Like I kind of alluded to, but there are many things that kind of been happening, but certainly earnings being a key one.
It's earnings season. So over the last about 10 days, we've heard from various players in the industry. It started off last Monday with Halliburton reporting their second quarter for 2020 financial results. Baker Hughes followed, then Schlumberger. NOV did earlier this week. We heard from Patterson-UTI, Precision Drilling, H&P, and Neighbors. So both oilfield services and equipment and onshore drillers have reported their earnings so far. In this call, Michael, we won't go into the specifics of the financials, but what we're going to get more into is some of the highlights, what kind of caught our attention, what surprised us in these earnings releases, what are some of the common themes that are emerging as this downturn evolves. and what are some of the future projections for these various players. So how do you think these earnings all went?
Yeah, I mean, and candidly, for those that are watching, I didn't dive into all of the earnings. I left that homework for Assaad, but I would say they were probably pretty challenging.
Yeah, you're absolutely right. It was probably one of the, if not the worst quarter on record.
Yeah.
What we've seen this year was a 75% drop in activity in North America. Internationally, 15 to 30%, call it 25 average percent, depending on where you go. So naturally, everybody's reports were a big challenge. Anybody involved with NAM shale activity? Halliburton is one that first comes to mind. Their revenues would have dropped the greatest quarter over quarter. So Halliburton's seen 60% drop in their revenue from Q1 to Q2 because they're the world leader in pressure pumping services. Liberty Energy Services, who's a pressure pumper, saw 80% drop. They released their earnings earlier this morning. Other big companies like Schlumberger, Baker Hughes had certainly a drop, maybe 40, 50% in revenue quarter over quarter or sequentially. But that's only because they're less exposed. They've seen kind of their frac fleets reduced, especially in North America. Internationally, where activity dropped about 25%, these companies have seen their activity drop between 15 and 20%. And that's really naturally because of the rigs that were being stacked, the crews that were being put on standby, the CapEx that was being slashed. So smaller reduction internationally, but quite significant given that these are international companies. So what do you think some of the themes that came up were common between those?
Yeah. So, I mean, again, without knowing in the granular, I don't think I mean, though maybe it would be great if we did have a rocket scientist come on. I don't think it takes a rocket scientist to kind of surmise some of the main points. I would venture to guess kind of the first one is probably looking at cost reductions or cost cuts.
Huge cost reductions across the board. But what's different this time is that everybody's calling it structural cost reductions. And that's interesting because now we're not just talking about some variable costs or cushion that companies are getting rid of, but it's more the fixed cost, the real estate, the PP&E, which really tells you that these companies are resizing their organizations, writing off assets, slashing expenses just to remain cash positive. Remember, every company's leveraged or has some sort of debt, and they have to service that debt. So they need to be cash positive to service their debts. So on the cost cutting, remember, we've just come out of a major upcycle that lasted for over a decade. And I'm talking about 2000 to 2014, really growth being the mantra. 2009 aside, which was a little blip, but really over a decade of immense spending, huge capex by these companies. Now all of that has to go away. This is positive because it allows companies to generate positive cash flow as they write off, they reduce their costs. But it's also positive because it builds incremental margins when the volumes start coming. So think of this as getting ready for the upturn in better shape, creating leaner organizations. Halliburton specifically said that cost cuts are here to stay, and no expense is sacred. Really going after every corner where they can rationalize or create internal synergies. And they mentioned they're creating themselves a new path in North America, getting ready for a smaller North America market, which tells a lot. Baker Hughes, although less exposed to pressure pumping, still has a lot of structural improvement to come. And they said that they have $700 million in cost reduction to go for the year. Schlumberger, $1.5 billion structural cost cuts this year. It's massive. They've changed their structure. They've changed their product lines, 17 product lines down to 4 divisions, 5 key basins. They're taking a lot of steps to adjust to this new reality. From an onshore driller perspective, Patterson-UTI, who's a drilling contractor, but also a pressure pumper, they too are right-sizing their business, protecting their balance sheet. They moved to just 4 active frac fleets. That's down from probably over a dozen, and they've reduced their structural costs by over $100 million. So a lot there to resize and accept the fact that this is kind of here to stay. Now that was our first clear theme. The second theme, I think, was more technology focused, and this is where different companies talked about different strategy to address technology differentiation, and really two big titles come up here. One's remote op, and the second is digital transformation. On the remote op, Michael, we've talked when we talked with Tony Pink a few weeks ago on this very topic. We said Baker Hughes had announced 60% of their operation being done remotely. Some other players were reporting that as well. Well, in their Q2 earnings reports, Baker announced that they've moved from 60 to 72% of their operation being conducted remotely. Schlumberger did 1,250 wells remotely, which makes up 2/3 of their activity. So 67% remote op, which is quite significant from where we were. And maybe a little bit of clarification on what remote op. That's not 100% running a job from shore if it's an offshore job, or from the office or town if it's a land job. But it's reducing the number of people on location. So think of 2 directional drillers, 2 MWDs on a location. They were able to, on average, reduce those 4 down to 2 or to only 1 in many cases to run the job, while being supported with either a kind of a shifting crew that rotates between rigs or from town. On the same topic of remote ops, digital transformation, clearly being accelerated was a common theme. Baker Hughes talked about their alliance with C3 AI and Microsoft, and how accelerating the digital capabilities. Halliburton, I thought it was nice to hear that the value adds from digital for them is becoming clearer. Remember, digital technology in oil fields not exactly catapulted its way through in the last decade in the oil field. But given the downturn, things have accelerated and people are seeing the value more and more, which is creating that adoption and improvement in performance. And we've heard from our own management and NOV that we'll be ready to talk about some cool digital solutions later in the year.
It's interesting also that you talk about that, Assaad, because I know on a previous NOV live broadcast we had, actually early on, we talked about the tracker vision technology that NOV has. So the kind of headset that you can wear and be able to essentially have direct access with field personnel remotely, which that one I think by far has been one of the highest engagement conversations we had, which kind of on our side shows there's a high degree of interest in the digital capabilities in the field, right, and in the industry.
Absolutely, that's a great one. I mean, think of all not necessarily the people that have to go and run a full job on location, whether it's directional drilling or MPD or cement, but also all the people that have to go in to fix something that's not always planned. And you're right, tracker vision allows you to go in as somebody who's already on the rig and engaged your whole organization, your whole team that's sitting back in the office, and not have to have people get on roads and journey management and even the costs that are associated with that, and putting people at risk, just by really putting that lens and really have a live broadcast back to the office and get that support. So we too are seeing that level of adoption there.
Yeah.
And on that same token, I think the Patterson UTI talked about the importance it has seen in owning hardware, in owning directional drilling kit for a drilling contractor specifically, which enables it to connect into the future. Remember, these guys have to compete as well into that whole space, and they see value in providing these auxiliary services to renting a rig. So high spec a rig fleet to them is probably gonna win compared to the less capable rig companies out there. So that theme of technology was quite apparent.
Yeah, and it seems like, so I mean, I know that they're, certainly that was initially talking about some cost constraints and certainly an eye there, definitely digital. But I feel like, just like in everything else, seems like threes seem to round things out. So I think there was like a third item that kind of seemed to be consistent across all the conversations.
Yeah, for sure. And that third one, Michael, is probably the most pronounced in terms of all these companies' direction. So all of them, one way or the other, are coming up with this new vision or saying that the game has changed and really have to adapt to it. So one topic in that third theme of recreating oneself or recreating company structure or vision or direction is the international exposure. Those who did well or better than others in the Q2 results had greater exposure into the international market, which had showed some more resilience to the downturn. The second topic in that theme is improving oilfield equipment and service profitability. As we get out of the downturn, moving forward, the incremental margins are going to be very important. Remember, during downturns, everybody's asking for discounts. Your pricing and your margins are getting eroded. So you get that pricing pressure to take away the profitability. These structural cost cuts allow these oilfield equipment, oilfield service, onshore driller companies to emerge past the downturn with greater profitability, making them more valuable companies. Many CEOs have pledged to become less asset intense or asset light, generate free cash flow, lead in the industry's digital transformation. So really the topic of profitability has emerged as a clear contender in that new vision theme. Halliburton, as we mentioned, is resetting its North America business with a reimagined product and service delivery system, more of a leaner organization that can support a reduced demand for activity, and they're aggressively chasing digital. So really organizing the company to support that kind of structure. Schlumberger's macro outlook is flat is the new up, and at least for the time being. So really looking at things to last for a while, combining digital with their international exposure, being able to support not create intercompany permeability or manage the whole life cycle performance of a well. I think those are big topics that are coming in, and I think we'll see more change and more transformation as we go.
So I know that as usual, we'll come to one of my I guess my first favorite part of our conversation certainly is getting some perspective on kind of what's going on. Second part is always giving us kind of the silver lining, or in this case in Houston, we've got a rainy day, so maybe not even silver lining. Just give me some sunlight, right? Help me understand what's the upside, and what can we be looking forward to, as we continue to transition out of the second quarter, and what can we be looking forward to or expect as we kind of move into the third quarter here?
Yeah. Well, Michael, I think one great thing we've heard from some of the companies, certainly Schlumberger, Baker, and NOV, was about energy transition. And I think each player in the industry can have a role in a low carbon source of energy going forward. Schlumberger, Baker Hughes talked about their plans to participate in hydrogen, although not entirely commercial, but there's lots of efforts around that space. And our own CEO, Clay Williams, talked about how energy transition in general is really an infrastructure, a capital and technology move that takes perhaps decades. And that those skill sets do exist within our company and within our industry. He also talked about how NOV plays a role in that space, whether participating in wind installation vessels and technology, or being a leader in geothermal technology, or how we're making investments in things like wind and solar in other areas. That language, that new direction that these companies are taking, I think is a very bright light in all of this. So really, to this new direction as a whole, I think is a silver lining. The exposure to international markets, developing what's outside of North America is important. Improving margins and profitability through cost discipline, digital technology, and participating in the energy transition. I mean, all of those come together to make this perhaps a beginning of a better, more stable industry. And on the lower side, on the other side, we heard some of the companies have not so great forecasts for the rest of the year. I mean, we've heard most of the companies say that, yeah, we expect this to last for Q3 and Q4, and things have to get worse before they improve. But that's, I think, if we take the right measures and we learn that stabilizing supply and demand and optimizing the pace of development for shale will always be a part of the overall equation, the overall structure of supply for hydrocarbons. But I think a more responsible discipline in exploring those resources in North America, perhaps other places as well, is the upside. The reduction in structural costs, well, today is a survival situation, is critical for the future of the industry. Shrinking the activity in North America that's ballooned over the last decade, and really right-sizing it to what it should be. I think that's a great improvement in the direction we need. We're going to see some tough times. The current environments are extremely difficult. We're seeing some really good companies struggle, some falling for bankruptcy. I think that puts more responsibility on the industry as a whole, as players to more responsibly develop, grow, hire, so that we really, we this time when we grow in the next upcycle, we do it in a more responsible, consolidated, digitalized, and improved performance way.
Right.
More sustainable.
Yeah, no, and I think that's going to be definitely something that'll be interesting to see as we continue to not only progress through this year, but in years ahead. So it looks like we have some questions that actually relate to a level of talking about sustainability or future energy, as well as some digitally focused questions. So to help us with that conversation, we'll go ahead and bring in Shelby Dumaine to get those questions over to you, Assaad. Hey, Shelby.
Hey, Michael. Yeah, so this first question, like you mentioned, is kind of talking about the digital space. So this comes from Facebook, and I'm sorry if the pronunciation, Darush was wondering, how can we apply the artificial intelligence and machine learning to create an intelligent well control program?
Hello, Darwish. We can. I mean, I think to Halliburton's point earlier, the value from digital is becoming clearer. We struggled in the past with seeing how does AI, how does data science, how does any sort of analytics help improve performance or reduce cost. So whether you take it at a well control level or directional drilling or for a rig move, it's all really coming down to creating processes that are repeatable, that are accurate, with as little unknowns or surprises as possible. So if we can use all that data, and we have a bunch of data that we don't use today in our industry as a whole, but creating that environment where there's a culture of adoption, there's a willingness to say every bit of data that I get, I'm going to use to learn from. I think there's something there. If we look at the next incremental improvement in performance, I think that's going to be from learning new ways in real-time monitoring and the capability to analyze on the go. And remember, these are wells that are drilled sometimes within less than a week. DJ Basin drills wells in 2 days that are 10,000, 11,000 feet long laterals. So if you're still relying on sending data to the office, having it analyzed, and sending it back to location, good luck. That's not going to happen. So true adoption of real-time data analytics capabilities is really the transformational bit of that. And if we do it while we improve on data quality, which is really the probably the most important thing around automation or analytics, then we have a winning combination of improved performance, safer operation, and more predictable cost of barrel at the end of the day.
Great. All right. Let's I think we've got some additional questions coming in the chat, I see. And if you just joined us, we're talking with Assaad Mohanna, NOV's Director of Business Strategy. Our topic today has been around kind of earnings season, as we've kind of come off of the second quarter earnings reporting season for many of the folks in the industry, but also talking and answering questions that you have. So if you have any questions for Assaad, feel free to put them in the comment section, whether you're watching us on LinkedIn, Facebook, or YouTube. So we'll go back to Shelby and see if we have some additional questions from the comments section.
Mm-hmm. Awesome. So yeah, we actually do have one. And I know we talked a little bit about mergers and acquisitions last week, but I was wondering, we got a question on, do you see, especially with the earnings call and all that's happening right now, do you see more acquisitions happening, some kind of big players acquiring maybe smaller ones coming here in the future?
Yeah, it's a good one. I think the expectation by the market is that yes, a further consolidation of the industry is expected. A lot of companies are in financial distress and are looking for a new home, and that's usually the preferred route to filing for Chapter 11. But it's not always the case. Some companies are, as we've seen, reinventing themselves and creating new sources of revenue, which helps with investment and funding. In terms of, maybe that wasn't the question, but in terms of acquisitions, specifically around digital, one kind of prediction at the beginning of the year that I remember the Spears brothers did was, are we going to see the first $100 million acquisition by big oil company of a digital company, and whether that is going to happen this year or not. And I think we haven't seen that big of an acquisition for a major oil field company, whether operator or service company of a smaller or of a big digital company. But we're seeing big size partnerships between service companies and big software suppliers like Microsoft. And I think that the understanding of I can't do it alone is growing, and we see greater partnerships and more collaboration out there, which is always a good indication.
Mm-hmm. Absolutely. And we got another question, and I'm just curious on your thoughts on quantum computers, and if you could talk a little bit to that.
Yeah, sure. We're probably not going to talk about that today because I have absolutely no knowledge of what that's going to be. But great question. We can make that a topic at some point.
Yeah, and I think I would be interested in it too, because actually, kind of to your previous point, right? You like we've seen many conversations or at least headlines talking about organizations partnering or collaborating with the likes of a Microsoft or an Amazon Web Service and doing a lot of kind of big data analysis. So yeah, I think it will be interesting knowing that quantum computing is sort of be the next frontier. Kind of in a data analytics standpoint, and when you actually look back, one of the things you'll see is when people think of like Cray supercomputers, well, a lot of the first ones developed were used to analyze a lot of the geophysical data coming out of the oil and gas field. So I think it'll be interesting to see if there's kind of a 2.0 in that approach. But yeah, I agree with you. I think it'll be a great future conversation. So good. Well, Assaad, thanks for the analysis and commentary as always. Really appreciate your thoughtful perspective and bringing insight out, as we like to say, from NOV. So good to talk with you this week. Thanks for joining us.
Thank you, Michael.
And thank you for joining us today as we continued our conversation with Assaad. And as always, every week, we look forward to getting your perspective, insight, and comments as well. You can email us for the Ask Assaad Show. Simple email, askassad@nov.com. You can also drop us a voice message if you'd like to do that, or you can give us a call at our comment line. So that's +1 346 223 4799. So look forward to continuing our conversation together. Thanks for joining us, and appreciate you watching and listening. And we'll talk to you again next time.